Right now, a bank somewhere just created money. Not printed it, not earned it. Created it. Out of nothing. And the scariest part, it's completely legal. This isn't a conspiracy theory. The Bank of England openly admitted it in 2014. Most economists know this. Most people don't. Today, you will. You were taught that banks work like this. People deposit money. Banks lend it out. Simple. The bank is just a middleman, moving money from savers to borrowers. Safe, controlled, logical. That story is almost entirely wrong. Banks don't lend your money. They create new money. Every time they approve a loan. Every single time. Here's what actually happens. You walk into a bank. You get approved for a $20,000 loan. The bank doesn't go into a vault. It doesn't transfer money from another account. It types $20,000 into a computer. And that money now exists. It wasn't there before. Now it is. You can spend it, transfer it, withdraw it as cash. It's real money, created from nothing. This is what central bankers call loans create deposits. The act of lending is the act of money creation. And when you pay it back, that money is destroyed, gone, deleted, like it never existed. Only the interest remains as the bank's profit. So why can't they just create money for everyone? Because they still need to follow rules. If you can't repay, the loan becomes a loss. Enough losses, the bank collapses. Banks also need capital, their own money, as a safety buffer. The more they lend, the more capital they need. And if the central bank raises interest rates, borrowing becomes expensive. People stop taking loans, less new money. The system slows down. The machine has brakes, but the machine never stops. Now here's where it gets personal. When banks lend freely, they flood the economy with new money, more money, chasing the same goods. That's inflation. Your money buys less. And here's the part nobody talks about. Banks create the loan, but they don't create the interest. So where does the money to pay interest come from? New loans. More debt? More money creation. The system needs to grow, or it breaks. And when banks create new money through loans, it flows into assets, real estate, stocks. Prices rise. Those who own assets get richer. Those who don't fall further behind. The money was created, but not for everyone. Banks are not middlemen. They are money creators. And the system rewards those who understand this, while everyone else just participates in it. The divide isn't between rich and poor. It's between those who know how money is made and those who just earn it. If this changed how you see money, hit like. It tells the algorithm this kind of truth matters. Banks create money through loans. That money drives inflation. That inflation erodes your savings. And the assets bought with that new money, they belong to those who understood the system first. Now you understand it too. What you do with that knowledge is up to you. Subscribe. Every week, one concept, no noise. This is just the beginning. Does it change how you think about debt and wealth? Drop your answer below. Real thoughts only.